So for me, it's really not about what asset class or, any thematic trends. For me, it's what I said just a couple of minutes ago. It's really the fact that most investor types are now ETF users. That's the most dramatic trend for me, whereas in the past it would have been a much smaller subset of users. And now today you have retail investors, you've got super funds, you've got insurance companies, even government entities use ETFs. So the usage has become very widespread, and I think that's really testament to the benefits and the efficiencies of ETFs as investment tools. ETFs in the equity space only make up about 6% of the market. Our own calculations put that number at about 3 to 4% in the equity world. In fixed income, that number is less than 1%. So we have to remember that ETFs are still a fairly small part of the ecosystem. And the other thing is, if you look at the fact that for every dollar that's traded in a passive vehicle, you still have $22 trading in an active vehicle. So I think that says a lot. Well, I think it's not about active versus passive. It's really about active and passive because, we really still feel that there's place for both in investing. And like I said before, we have a lot of active investors using an ETF as a tool within their portfolio. So, for example, using an ETF to make a precision investment, using an ETF to cover off an asset class. So you can use these in combination with active instruments, or you create an active product by using the building blocks of ETFs and expressing views, which means it's still an active product. So the ETF does not necessarily take anything away. In fact, it enhances the choice of investment tools for active investors.